Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Traders Workshop, where we like to feature our NinjaTrader Ecosystem partners. This week's no different. I'll be your host, Tom Schneider, CMT with NinjaTrader, and it is my pleasure to welcome back just a wonderful guest we've had on a special edition of Traders Workshop before, back in the spring, but you might know him as the podcast host. You might know him as purveyor of charts and services on the NinjaTrader ecosystem, but I know him as friend of Mike Burke. I'm going to welcome in Andrew Horowitz. How you doing, Andrew?
Hey, Tom, how are you? And hello to Mike out there. He's a good. Mike's a great guy. Mike and I don't know if you know this, but Mike and I meet often for lunches. We always go to unusual places to eat.
Yeah, it seems like every other time I talk to Mike, he said, "Oh, I had lunch with Andrew. This is, this is what we did. It's great."
We definitely lunch together.
That's awesome. But thanks for coming back on. I know, you have a lot cooking as always, but it's great to have you back on. And, we were just talking about how sometimes it's great to reset. Let's do this, though, before we jump into the topic. First of all, just find out how things are going and maybe a little bit of background for our viewers who are new to this show or new to NinjaTrader, how you got into the business, what attracted you to the financial markets, and kind of your progression up till now, what you're doing now.
Yeah, that's good, because I think, the street cred is important when it comes to providing any kind of information, education, when it comes to finances, because there's so much information out there. I mean, you try to go out there and take your information from TikTok, YouTube, wherever it is, and try to learn these days. It's like trying to take a sip out of an open fire hydrant, right? What's going on is that there's information overload. So the question is, where do you get your good stuff here? Well, that was a question I asked many years ago, before we had all this internet. Back in the days that I would go to the library on the weekends and open up the Barrons and the Kiplingers and all the various periodicals that I would look at on the weekend, especially to understand what was going on for the week ahead, right? Fast forward, we don't have to do that anymore, because we know the prices of things, and we have live charting as we're, looking at on a regular basis, whether it's intraday or throughout daily, weekly timeframes. But I got interested because, it's a fascinating area, and it was back in the late 80s. And I said, this is pretty interesting. And it was an area that I was, I saw my father do well in the financial services area, not related to investments, more insurance and planning. And I said, oh, that's kind of interesting. And then I got immediately attracted to the markets. And my first taste of it was back in like 86, right into 87. And of course, what happened in October of 87, that big market, crash that was pretty dramatic, but then that bounce back. And it was pretty fascinating to see how that all worked, and the emotions and all the things that went into the process of trying to rationalize what was going on. And at that time, I was looking for ways to understand the markets better. And immediately wasn't, you may say to me, oh, well, charts. No, that wasn't how it happened, because charting was not the first thing that I looked at, right? I wanted to look under the hood. I wanted to understand what was going on with companies. I want to understand, how markets operated. So I spent a lot of time trying to understand this. And what happened was it bounced me around, right? From fundamental analysis to technical analysis to quantitative analysis. And at the time I was managing money for clients, and I was primarily looking at modern portfolio theory, mean variance optimization, looking at balancing portfolios. I was getting a little bit crazy with it, because back in those days, there was a whole bunch of studies by Brinson, Biebauer, and Hood, and all these efficient frontier concepts, and William Sharp. I had the privilege of having dinner and spending time with these gentlemen over the years, and learning a lot about what was going on with it. I was a little peon, I thought, with all these academics, and trying to understand, like, I don't understand, why are we looking at standard deviation, not just a downside deviation? Because who cares about the upside? Upside's great. Who cares if we have big volatility to the upside? I'm concerned about the downside, right? And all these things kind of came together. I'm fast forwarding you here. Came together when I looked at the key components of what makes the markets tick, and I thought it was all about some of the basic fundamentals about understanding a company and how they work from a financial standpoint, fundamental analysis, understanding how to find that, how to filter that and score that and look at that, quantitative analysis, and finally the emotions and the mood of the market, which is technical analysis. Technical analysis has nothing to do, charting has nothing to do with whether a company is good or bad, right? We can throw up a company and take a look at it. And let's use GameStop as an example from last couple of 3 years, right? Is it a good company? Is it a bad company? Didn't matter. It had nothing to do with what was going on with the charts. Now, we could say that the charts are a forward-looking mechanism, is what people want. We could say it's an emotional barometer of a particular instrument markets. Right now, we're looking at what? Crude, right? We're talking about crude oil. I think there's a daily on crude, and you can see, I got to move. You're right there at the end. So currently, crude is, I think it was at 89. I think you have more. There you go. It's an 89 and change, and we look at that, and that is a really interesting chart pattern, by the way, that we're looking at right now. Some may say it's like a cup with a flat handle, a la Investors Business Daily. In a way, it's maybe not exact, but it's got that general shape where it's a cup, if you can see that cup on the bottom, and then you got a handle to the right, and then you got a break above that handle all the way to the top right. Now we're breaking above resistance that was there for a while. But if we look back, look back all the way, where are we going to? Well, from a simple standpoint, we could say probably somewhere around the 92 range. I think there was Tom, wasn't there a show this morning you would tell me about that somebody was looking at 92?
Exactly. Jim and I were talking about crude, and we looked back to the previous area of resistance that we saw back in October, November last year.
Right. So that's one way to look at it, right? Simple lines, where it's going, directionality, but it doesn't tell the whole story, by the way. The whole story really is, where do traders really want to trade? And that's where the breakthrough came in when we created these charts that were based on volume and price, looking at a footprint, an X-ray. We also talked about, wouldn't it be, before the show, we were talking about, wouldn't it be nice to know what people were doing before they did it, right? Or what they were doing. So we started looking at, what is the best way to determine where prices are, why they're there, who's putting their bet up, right? So if it's one thing, if we have a lot of traders doing something, we get a trend that's moving, but what if we have a significant amount of traders that are small and large, placing money at a particular price? Volume, when we look at a traditional volume chart, is vertical, right? It's just a daily, or it's just a culmination of a time frame's total volume. Okay, that's great. What we did is we looked at volume and price. Let's look at actual volume price. And I think you have, I'll give you an example. Do you have I think you have, volume. There you go. Yep, that's good. So you looked at volume profile as an example on the chart. Now, this is the one way to look at it. It's on usually on a horizontal. I don't know if that's visible or not.
You know what? It's going to take a little bit of time. There you go. And I've got to adjust some of the display, but it's going back quite a bit to.
Oh, that's why. Yeah. So the bottom line is that we'll look at volume at any given price, and where is the magnitude of that volume playing? So we created these charts for internal use so we could find out where the line in the sand was, where we wanted to place our money, if there was going to be a breakout, a breakdown, where there's going to be a component. There was another chart we were looking at earlier that had that. Look at the RTY. I think the RTY, was that? Maybe not. There was
we had it. You know what? I will bring that chart up. It's in the back.
There we go.
Yeah,
there we go. Somewhere. That's crude. That's crude right there.
Yeah.
So see the far left, if you could point that out to the far left, that is the profile. Now that's done in a very simplistic for the entire time frame that we're looking at here. What we did is we want to say, okay, well, that's great. We could see that there is no volume. It's where's that pink line right there? 86 to about 80. 87 or something like that. Right through that range, there was very little volume. All these areas on the left-hand side that are almost blank, right? Not filled in with any color. And then we get the darker color where there is a significant amount of volume. Now, this is a 10-minute chart. If you want to switch this to a daily for a second, this particular chart. Yeah. It may take a second to load that too, right? I think.
Yeah, exactly. Because it's going through every trade. It gives me those summaries, which I'll try to take off.
Yep. So the bottom line is that what happens here is we're getting all this data tick by tick. So we created something called Trigger Charts because I know a lot of people would want to use this. It became very, very popular, very successful use of an indicator on a chart that is used by retail traders and other traders, right? The day traders, swing traders that can find exactly where that line in the sand is. And that line in the sand indicates where there's a high volume node or a significant amount of upside opportunity above or below a level. Now, that's not what you're seeing on the screen right now. I'm kind of talking more concept. So that's what happened. That's what we did it. Yeah, this is not looking exactly right.
Yeah.
I don't know what's going on there. But okay. Concept. It's more concept. It's called a market profile made famous by a gentleman named Peter Stottlemyre. And he looked at the idea of looking at where the volume is. So now let's just think about this. If we could plot on a chart the tick by tick volume density, right? So every time there's a trade, there's some volume. We're not talking about one share, two share. We're talking about a lot of shares. So if we can plot that density of where that is, there's the density chart right there, right in that inset right there. Perfect. So what that shows is that there is heavy volume right there at about 80. What is that right there?
89.
89. See, that's the greatest amount of volume right now. Well, that's telling me that there's either some buying or selling going on right there. And that's going to be a really important point of inflection on this. Above that, it will probably break. And there's a top. I'm not sure what the green line represents entirely, but right there, that is another area. So now you go above that, there's nothing there, and then you have just an opening. And again, this is a 10-minute chart. If you take this daily or weekly, whatever it is, it gives you really good indications. And again, this volume profile, market profile that's on the left here, ours shows you. Can you switch over to Trigger Charts website?
Sure. Yeah. Let me bring that in.
Well, ours shows you in our various a number of different components you can look at, but as simple as the boxes, it shows you exactly where. There's a chart right there that shows you exactly where these points are. Very clear, very easy to look at, very easy to look at. If you click the chart indicators button, I think that will, yeah, that's right. Yep, right there. So right there, that's gonna, give you this. Yeah, these are all the different indicators that we have, all these different indicators that go on there. So basically, let's go back one page because I want to talk about that chart. Yep. So if you just look at that, again, it's a smaller version of this, but you see like yellow lines and green lines and red lines, very simplistic, takes all the guesswork out of where's the top, where's the bottom, where's the support, where's the resistance. And I'll tell you why I did this, Tom. I did it for me. I needed, when I looked at a chart, to make it easy to understand. Because when we're looking at charts, we just look at charts. It gets complicated. It's a lot of things happening, not to mention, I don't know about you, but that 9:30 bell rings. It's like stuff is screaming at me all day. My computer's like screaming at me. Hey, look at this, look at that, look at this. Now, mind you, talk about a normal day for any trader. Your average person out there, right? That's listening. You don't only do this all day. You may have some emails. You got text messages that come in. You got to, you got to answer the phone. And you know what? It's difficult to continually look at things that are not easy. So when I see a color like a red, I know that we're below a line. We're in a short setup position on the right-hand side. I know what's happening very easily. I don't even have to think. I'm like, when I just look at this chart, hey, we're in a short setup. We got about 5 or 6 different bars down. I know that my level of upside is going to be at the green marks, those two little green marks on the bottom there. Yeah, right there. So you're going to see that we're going to see the upside. Oh, I'm going to get out of my short at that position, et cetera, et cetera. Point is that it keeps me grounded. And that's something you and I talked about, right? Was the idea of how to reset and how to make sure that you are doing what you should be doing on a regular basis. And all the things that we put together for the chart indicators was about making it easy and understandable. Anything takes a little while to learn, any process. But if you can have reduced distractions on a chart understanding just, and again, without knowing the name, the symbol, the commodity, it doesn't matter. The chart is the chart. So you need to get out of the idea of, I don't like that stock. I don't like that commodity. Oh, I never trade crude, or whatever your story is, right? Whatever you have pounding you in the back of the head that, man, I can't stand Best Buy stock. That thing, I'll never go short. I'll never go, or I'll only go short. Meanwhile, the thing rides away. I'll never buy GameStop because it's a rigged stock. Yes, but boy, that could have been fun, right?
Right. Well, Andrew, what I love about this chart is the way you use data visualization, the way you, without knowing anything about the chart itself, without knowing anything about the indications, I can look at that chart and two things come away with right away. The solid yellow lines are very important.
Yep.
The coloring of the bars are very important. They're not traditional candlestick colors, so they must be something to do with trend or bias.
Right.
And then there are other levels that are important, and it might take some learning, right? Some investigation to learn more about, but I'm guessing it's probably in line with the other levels that are there and the coloring of the bars. And so that's what I really like about this, is not knowing anything about what these are made up of, what drives that line. I know that the yellow line is very important. I know that the red and green and the gray shades are important. I know that the shading at the bottom of the chart, the red shading, probably means something.
Yeah.
And we're very visual creatures, right? It's easier to look at a picture than to read numbers for most people. I won't say for everybody. And so I can look at this picture, process a bunch of different things, and realize where we are now, where we were with that yellow line, where we were at the top, all this information that can help me decide, what am I doing right now?
Yeah. Yeah, and that's a good point, because we looked at that chart a moment ago. If you want to switch back to NT and that crude chart that we were looking at before, and one of the things we had was looking there's a chart that's visual, right? And a minute ago we had the chart that had the same data, but it was just speckled all over the chart, right? All the intermediate data. Now, how are you supposed to make heads or tails out of something like that? It's there. You can look at it, and if you want to spend time looking at it like that, yeah, what are we supposed to make of that, right? It's there. It's good information, but when you can consolidate it and remove some of the
clutter.
Yeah, I guess that's right. That's clutter. That's a good point.
Clutter.
Yeah.
That's what I call it.
Can't have a lot of clutter.
Right. And it's interesting you bring up Peter Stottlemyre. I think his work was really revolutionary, because he found a clever solution to volume that hadn't been done before, and done before the electronic trading. Right now we have volume profile, which is actual volume traded, which is great. He didn't have that. He didn't have that back then.
No.
So his proxy, you look at it, it really is a proxy now, but back then it was innovative. Amazing stuff. So market profile led the way for volume profile, I believe.
Yep.
It's all related.
And VWAP, for that matter, right? Volume weighted average price was a big thing. My good friend Brian Shannon has a couple, three books out on amazing books, by the way, on VWAP and anchored VWAP, which is basically the idea that same story, right? That we're looking at average weighted, VWAP is volume weighted average price, VWAP, right?
Right.
And again, it's going back to looking at volume as a component of the chart, because blindly looking at a simple, I would say, chart that doesn't have volume of any sort is really, I think that's doing a very big disservice for you, because you don't understand what's happening. In fact, it's important to understand if things are moving up or down on light volume. It doesn't really tell the story, because you don't have all the players playing.
Right.
You want to have something that is very representative of what is really happening. And without volume, price is just, it doesn't matter. It doesn't tell you what's going on.
Right. Because you take away that idea that a retail trader like myself can put in a trade for one micro E-mini, right?
Right, right.
And then you, Andrew, can come in with 100 micro E-minis or in the same market, one E-mini versus 100.
Mm-hmm.
Your trade has much more weight than mine does in terms of what that does to the market. So VWAP exactly, incorporates all of that. And I think what's important to know too about it, just from why it's so valuable, is it's because it's basically cumulative. At that moment, this is how much the average price was for the entire session, or wherever you start. I don't know if you like to start at 9:30 with your VWAP calculation, or you start at the beginning of the session, but either way, wherever you look at that VWAP, that's the average price at that point for the entire session. It's not just for that bar, but it incorporates everything from the starting point.
Yeah, I mean, I prefer that when we have so the VWAP it can be any time frame, right? So a commodity is a little bit different because it runs on a 24-hour basis versus stocks that have the pre-market and aftermarket. Not to mention the fact also that commodities are worldwide traded and stocks are more, well, US stocks, they are globally traded, but people are sleeping, right? It's a different, it's kind of like closed. There are closed times that US markets are actually closed, right? After 8 p.m., even though you have some things like SPY and Qs that may run 24 hours, very thin, very, very thin trading. It's only for the absolute gamblers that need to, get their fix by doing that versus Bitcoin, I guess.
Right.
It's not 24 hours.
Well, yeah. And here's gold, right? And even gold, you can trade it on other markets, but this is the CME contract. But you're right. We do see a lot more activity or volatility in the first session or the Asian session, in the European session, and then of course in the US session where it trades locally. Crude, you have competing contracts like Brent. Yes, you can trade it 24 hours a day, but it also does have complementary, if you would call it that, complementary contracts in other parts of the world.
Mm-hmm.
But these are global commodities. Copper, right? Copper is something certainly that Asia pays attention to because of China. We see a lot more volatility in these markets than, let's say, like you said, E-mini S&P. Europe's trading the DAX. They're not trading the S&P as much, right? Or the stocks or whatever it is. Asia's trading.
You'll notice something though. 11 o'clock, 10:30, 11 o'clock. What's the importance there? I mean, you see this is popping up almost every day. This happens, by the way. What happens? Well, the European markets close and they need to keep trading,
right?
And they need a liquid market.
Right.
So if they need a liquid market, whether it's going to be these markets are all generally the same, but you look at the RTY, the YMs, the ES, that you have there, you're going to see similar kinds of moves on that. Pull the ES up. Yeah, similar kinds of moves. It's at 10:30, 11 o'clock in the morning when they go to sleep or close down the markets in Europe. They look for other outlets for this. So when you look at this, also you can see that there was a big gap. Interestingly enough, if in the middle there, that big gap right there of volume, right? No volume was traded in there. But as soon as you got above that line, look at that big spike in that bar, that green bar, 3 bars ago.
Right here.
Yeah, you got that coincide right to where the top end of the volume corridor that was pretty heavy right there.
Right.
And you see this mirror image. I mean, almost every day we see this real weird phenomenon lately of drop into 9:30 to 10:30, give or take. Big move up, then a drop down, and then kind of starts wandering back up because there's no news or there's some news that's coming. And this week with CPI out, Oracle last night, really crap in the bed, to be honest with you,
right?
With their outlook, and everybody looking at Oracle as a very important cloud provider, especially in the AI space and the other advanced technology, storage and cloud computer space, basically having just such a poor outlook. I think the stock was down, 13% or something like that today. But that's really what happened. That the NASDAQ, you have the NASDAQ here, not rising up as much on that, right? So there's still a little flat. I think there's a little concern that there is some headwind. But look at. I want to show you something here. And again, this is just a daily that we're looking at. We're looking at a 10-minute here. but you see the openness in the volume profile there, the market profile there, a little bit higher. Go to, yeah, right above there to that giant. See, there's nothing there. There's just nothing there, right?
Right.
I mean,
right.
it always grabs my eye. I see that. I'm like, I look. So what I always do in the charts, look left, what's there. Then I look to the right. Look at that giant bar down.
Yeah.
That just fell right through that entire area. There was no volume on that, which also tells me, by the way, that if we do break above that level, I think that what are these green lines and the red lines you have here? Is this opening?
So this is the opening range.
Opening range.
Right?
That's what I thought it was. Yeah.
Yep. 30 minutes.
Yep. Okay. So if we get above approximately there, give or take, there you go. If you get above this area, you're going to probably see a fly up again because there's no volume that's really preventing it moving down. And this volume profile that you put on right now is interesting. Can you take your cursor and put it to the top of the volume profile? Just place it there for a second.
Yeah,
of the most recent one. Yeah, right there. So there's the top. I want everybody to pay attention to this. There's the top. Go to the bottom now. Okay, go to the bottom. Now, if you can now look at this for a second and kind of just go with me for a minute. If you look at what letter this represents, I would call this a little b.
Yep.
Okay, you see a little b in there, top line with a B. Now, that's very representative of a very supportive overall pattern. Yeah, draw this B there. See that? Yes. Yeah. There you go. That's good. Perfect. Yep, that's a little b. So now this is a little b. This big, there's capital P's, there's capital B's, there's all these different things in market profile. Basically, there's a little b. What I see there is that if, in fact, it's always an if-then, right? We always got to use the if-thens.
Right.
So if we use an if-then, it's something like this. That if we break above 1591 or 15, you're right about there. What is that? 1591?
1591. Yeah.
Yep. 1599. Approximately above there, we need to start watching out if you're short. Because why? Well, there's no volume on the upper side. Now, in fact, if we look even further left, there's no volume there either. Right? There's a big hole. Big hole. Now I got two things that are coincident indicators confirming me, making me feel like, hey, you know what? I use the word feel, but let's not use the word feel. Making me believe, because we don't use feelings when it comes to trading, right?
Right.
It's like, because you know what? You're a trader. And just think of yourself. If you are a trader right now, think of all those people that piss you off to no end, that using their gut feeling on the blackjack table. The dealer's got a 6 sitting up. You got a 4, and you're like, you know what? I'm taking a hit.
Right.
The rest of the table is looking at you with fire and smoke coming out of their ears and their noses. And you're like, why? And you get an 8.
Yeah.
And the dealer turns over, or you get a 3, let's say. And the dealer then gets a card or no, let's say 8. And the dealer gets a card and would have busted.
Right.
And you're sitting there like an idiot. And why does the house win? Because the odds are in their favor. All of what we're talking about here is putting the odds in your favor. Question yourself every day that you're trading. Would you rather be the house, or would you rather be the schmuck on the blackjack table that's feeling that he should hold on a 12 when the deal has a 9 showing? So in this scenario here, we're going to set up the odds in the favor of the trade. If we get above the level, and we see that there is no volume there, and we look even further out and put maybe a few of these, and our charting system, by the way, Trigger Charts, it does this for you. It puts all the different swing. You don't have to guess. You don't have to place it. You don't have to do anything. It puts it all on the chart at the appropriate place for you, right? These particular profiles that it puts on are all done by certain swings and certain calculations on any time frame on the fly. You change from a daily to a 10-minute to a 5-minute to a 30-minute on the fly. It adds the appropriate time frame based boxes, market profile, trend indicators, all that on the chart. So now, and we're doing this by hand in a way, but now it puts lines, definitive lines. So it would throw a line probably somewhere about 15,991, saying, hey, you know what? You're good below this level if you're short, let's say, if that's the case. Right now we're in a consolidation basis. I would not be short or long right here. Until we break down below about 520, something like that. 55. Oh,
yeah, right there.
No, a little higher. I'm sorry. Go to 15,540. Yeah, right there, right about there. There's your level. If you go down below there, you got like not a lot down there. It's a light colored blue, right? That
Right.
fat part that you have right there, very difficult. Everybody's trading in there. There's not a lot of wiggle room up or below. This is a consolidation, maybe trade if you want from the bottom to the top of that range. If you break down, you go short. If you break above, you go long, cover shorts. But there's the trade, in my opinion. If you get above this level, you have a lot of volume, why you saw that giant breakdown, and you could see a 20, 30, 50 point move in that range very, very quickly back up to the top at about 15,630, where you're starting to see once again, more volume come in and then be a consolidation zone again.
Well, and Andrew, the way I look at this is a vacuum, right? Mm-hmm. So if we start to break above here, there's nothing saying really that we should stay around here, right? Mm-hmm. This level that we decided, maybe 590, maybe a little higher, right? Because there is some trading there. A
little bit, yep.
But I see nothing here in that big move down. Market wasn't interested. So when we hit here, to me, that's just like a vacuum pulling us up. And again, not always going to happen, but that's the trying to stack those probabilities in your favor. This is what I see. Nobody was interested in trading at this price when it was moving down, but there was interest up here when we got whatever came in, right? Whatever that was, 1030, 1020, something moved this market down. What was it? Well, enough to take some trades here. And we know that there was interest before that. Like you said, volume starts to build around here. That's where I think the vacuum might take us.
Yep. We call it a hole. I call it a hole.
Okay.
It's a hole. It's just, you look for areas that are blank when you look left. So in charting, everything I always teach is about looking left. As a matter of fact, I pound that into people's heads. Look left, look left, look left. Always want to see what happened behind us. Right. It's kind of like driving, you can't just be looking forward and expect to have a great time just changing lanes without looking to your left, looking to your right, seeing what's behind you. You need to kind of look at the entirety of what the situation is with the chart. In charting, it's looking left. We want to look left. We want to see what's going on. And we want to make sure that we understand what happened before, because sometimes, or more often than not, the footprints that are left, these are the footprints in the sand I was talking about, right? These are what we know happened and is happening as we go. This is building, by the way, as we're talking. It's continually building. But this is exactly what's happening, and we want to make sure we understand what that is. So looking left is a good way to understand where those points are. We have nothing from a price standpoint that's to the left. There's just nothing below 630, give or take. There's this nothingness.
Right here. Yeah. And right here.
Right there. There's nothing there. That's a big hole for price to move either direction.
Now it's the opposite of being in London, right, Andrew? When you go step off the curve, you look right.
Yeah, it's correct. Yeah, you better. Yeah, mind the gap and look right.
That's right. So look left when you're looking at charts, people.
Yeah, exactly.
And this works for any market, right? Like you said, I don't want to trade this stock. I don't want to trade this commodity, but the volume doesn't, it's agnostic, right? So I could go to the copper and see, it might not be as pretty, right? It might not be like as definitive.
Then that's a chart you don't want to trade, maybe. Right. That's a play. Right. Now, I don't know what's going on here. I'm assuming if we have the dollar here, if we have a currency here, we'll probably see the dollars falling here. I mean, with all this happening.
Yeah, I'm not going to bring up right now. I have an issue with the currency, so I'm not going to bring those up.
Just go back to crude though.
Yeah.
Crude, CL. Right there. Yeah. So see, I mean, you can see this all these things are just moving.
Yeah.
This is pretty substantial. I mean, I think this is problematic, by the way. That's another story. Oil being this high, there's a fascinating thing on Wall Street. So the analysts will tell you, the economists will tell you that falling oil prices is good for the consumer. You've heard that before, right, Tom?
Sure, of course.
But rising oil prices and gas prices doesn't seem to bother the consumer. Right. And I'm like, I don't understand. I mean, wait, Well, they just absorb it. Like, where do they absorb it? Into just a secret bank account they have somewhere or something?
That's it. I mean, when you talk about distribution of goods, right? Energy. When you talk about production, energy. When you talk about consumers, they need energy. But it isn't just energy, right? Crude is not just energy. Crude is byproducts that go into everything we use.
Petrochemicals. It's huge.
Exactly.
Huge.
Exactly.
Yeah.
So
most people don't understand that. That's a very good point, because the fact that crude oil is going up, WTI is what we track, but Brent is over there. But WTI is what we track, but the entirety of the crude complex. When you look at the pricing of that, what's important to understand is that really flows into the consumer inflation levels pretty significantly. This is a big move. If we go back to, do you have daily? Can you go, or actually, can you go back? Let's see, go back monthly. Can you do a monthly chart?
Yeah, let me pull up a monthly chart. Just bear with me 1 second.
So the thing about what's gone on with crude is that it's a very big component when it comes to all things related to consumer. And it's a very big part of the inflationary discussion, and crude moving higher, and the fact that we have what we've seen, right? So is
let me just take off some of these studies.
Yep.
They're meant for some other things. There we go.
Yep, that's good.
Let me go back. How far back do you want to go on
just
crude?
just go a couple of years.
Yeah, let me do this. Sorry about this. I will 1,000, and we'll change this to a monthly. There we go.
Perfect. Let's see.
Let's see what happens.
I think it's still daily.
I got a lot going on here. I got an Ichimoku cloud, a couple moving averages.
I like it. I like the colors.
Yeah.
Point is, though, if you look back in history, right? So let's look at, just even on this chart, doesn't matter. This is good because you can see something here. You see, first of all, we broke above anywhere for 2023, right?
Right.
So that's first of all. So we know that. So this is going back. Yeah, this is going back pretty far here. Where's the right? Yeah, that's good. That's so the high level, right, was that 120 mark, 130 mark back when we had, if you remember that was the time period that we had, what was it called? Peak oil. We're running out of oil. There's no more oil in the ground, right? And then miraculously, there's a lot of oil in the ground, and we go through and we have this big drawdown, right? And we have all this oil that happens. And then we get into, of course, some of the big issues that happened, like in 2020, of course, the pandemic, the whole world shut down. So therefore, oil went negative. You remember that whole issue?
Oh yeah, right there. Yeah.
But you couldn't get your hands on it. Nobody could really trade it unless you wanted to get, if you want to get delivery of it. And I'm like, I am not interested in having a truck back up, or whatever. And that was a very difficult time, but even if you tried to get it, it was still very difficult because there's weird things the market was broken, right? At that point. But you look at what's gone on, and we went as high in, as what, 117. We're right back on the line to do that again, because, this administration took from the strategic oil reserves, the petroleum reserves. And what was interesting was, I don't know who does this, but they lay the cards on the table, say, you know what, we're going to buy a lot back though, and we'll tell you when we're going to do it, what price. I'm like, wait. Why are you telling everybody when you're buying this back? They're just going to jump on production like they did. And we know we need to increase it because we have some of the lowest reserves, that are in history right now, right? The strategic petroleum reserves, the SPR is depleted. So we have to restore that. So everybody's like, okay, well, we'll just stop production. So OPEC does stops, slows production, maintains the 1 million barrel a day, voluntary production cuts. And what do we have here? Well, what we have is that, the economies generally are okay around the world. China's not doing so well. Of course, Europe is not great. Germany, really bad. But the fact of the matter is that everybody's trying to make sure that they can get their hands on this. And then what's happening is that they're turning off production. This is not about, supply demand curve, supply being outstripping production naturally. This is a production cut that's really doing this, and it's really jumping things up. This is going to cause problems to inflation, to cause more problems for the Fed. And even if Fed, God forbid, says that the rise in, hold on to Tom, If they say that the price increase in crude is transitory, there's going to be a pitchforks out there. You know what I'm saying?
Well, I will say I haven't heard I think they learned their lesson a couple years ago when Janet Yellen said it's transitory and it wasn't. I think you'll never hear that from Secretary.
They've retired that phrase?
I think they retired it. Now it might be something else. There might be another explanation, but right now their comments are we're data dependent. So that's a safe thing to say, right? We're data dependent. We're data dependent.
They should be data dependent. First of all, they're in a blackout period right now. I think the 20th is a time period. They're coming out with their next thing. I come from a world of the Fed. We didn't know who they were. It was a secret, black hat type of deal. Every once in a while, there was somebody would come out and talk about something, make the rates, whatever. Now, the Fed guys are all rock stars. They want to come out. They want to do the parade of conversations. This one says, we have enough. And that one comes out. He's a non-voting member. He is a voting member. And we have all this matrix of nonsense that every day moves the market because we have the consumer confidence that went down, but it's not about the consumer confidence, how the Fed's going to read it, right? This whole weird relationship cross asset movement.
It's a big deal about what is the Fed looking at, right?
Right.
What are the numbers that they really look at? And when I was at Bloomberg and I worked with some people in the economics group, like my friend Stephen Jonathan, it was really about trying to determine what the Fed was looking at this meeting. It's not even just in general. It's right. Okay, what are they looking at now? Because today we're sitting on maybe one more rate cut, maybe. But a year ago, rate hike, sorry. And then, now it's talk about when are the rate cuts going to start? Very different a year ago. So they're probably looking at different data all the time.
Right.
Guessing what is that data they're looking at. But you're right. When we started, maybe you knew Alan Greenspan's name. Maybe.
Right.
Now we know Goolsby and we know.
Oh yeah, no. All these guys. Right. Yeah. Harker and this guy and Bostic and the thing is that and by the way, there was all this handicapping. It wasn't as important. They were an important part of the economy, not just everything. And now it's everything. But the point is, when we look at the charts here, it doesn't matter with all this side conversation we're having, right? What matters is directionality, trend, levels of support, levels of resistance. And the fact is that we can find that all from trigger charts, the stuff that we've created, right? All these really, I would call them pro series charts that we've created for the individual investor that's available on the ecosystem.
Yeah, and maybe we can show that again because we are running up on time, and I do want our viewers to see what the website looks like. It's just triggercharts.com.
That's it. Very simple.
Easy to remember.
It will take you right to a place when anything you click in here will take you to a place for installation. We've teamed up with task profiles and task to my friend Steve to do the installation tracking, authentication of the indicators for you. So you can use it on NinjaTrader. Very, very powerful. There's a free trial on that right on the top there. So you can, you go there and just takes you right along and click and, just install it. And if you hate it, just get rid of it. But I will tell you, if you stick with it for a while, we have people on there, traders and clients for years and years and years, because once you get it, once you understand the basics of it, right? Which is, it's red, it's short. Above the line, do not be short. Below the line, do not be long. Look left, look left, right? Look at your market profile. Where's the greatest opportunity? What gives you the edge here on this? Yellow, the inside going to above the yellow line there is a key profile level, key volume level. And then we have like gray is inside. Don't trade. Don't just sit on your hands. Could be one of the most important things to know about trading is sometimes it pays to sit on your hands.
Yes.
You don't have to.
I always say, Andrew, there should be one day devoted to not trading at all, just sitting on your hands.
That's correct.
Just bury that instinct to always be clicking, always be trading, because there's movement in the market. But sit on your hands for a whole day.
Yep.
Don't trade.
Exactly.
And hopefully that helps you. But I completely agree with that. That's a big deal, Andrew.
Yeah.
Where else can people find you? I know you have a couple of podcasts, which I've listened to, which are great. Love them.
Thanks. Yeah, we have DH Unplugged, which is Tuesday nights live, 9 p.m., but also you can find that on all your favorite pod apps in the stores and iTunes or the Apple podcast store and all that. And the Disciplined Investor, which we interview some of the greatest investors and economists and analysts and people from the industry. And I give my 2 cents on a regular basis about things. And you want to listen to that each week. That comes out on Sunday, but you can find that on various places like Spotify, Amazon Podcasts, Apple Podcasts. You can go over to the disciplinedinvestor.com as well. And you can grab a link there for any of the places that you want to listen to it.
Awesome. And you've been doing that you're one of the pioneers, right?
Yeah. This is the longest running financial podcast, actually, independent financial podcast since 2007.
Well, okay. So a lot of time, some of our viewers might not have had an iPhone or, at that time, right? They're young. Podcasts were in their infancy and you jumped on it. So that's great.
That's at a time when the word podcast, when somebody said it, the response was, what's a podcast?
That's right. That's right.
Yeah.
Cool. Well, thank you so much, Andrew, for being on the show again.
Appreciate it.
Come back at any time. You're welcome here. And, hope that, you have a great rest of the year. Anything going on? Any big travel or?
I got travel coming up. I do have a trip to Barbados, going diving with my son. That's going to be fun at the end of the month for the weekend, for an extended weekend. I don't know. I got a few other things cooking. I know that it was a crazy summer. So I could use time, like you said, sometimes to sit on your hands, take a day to relax, and enjoy, but, I'm here for a while.
That's awesome. Great. Yeah. The extent to which I'm traveling with my son, we're going to Baltimore Saturday.
There you go.
Not quite Barbados, but, but important to get out. So
it's important to just be with your son. It doesn't matter where you are.
That's right. That's right. And I want to thank all the viewers for coming, watching our show as well. We'll be back again next week at noon on Tuesday. In the meantime, have a great trading day.
Thanks.